good evening, good afternoon. It is July the 7th, 779, 2024, or 778. Futures just opened, literally just 30 seconds ago. So going to go ahead and turn tick strike off, not to disturb anything. And futures are fractionally gapped down, fractionally. So going to go over this as quick as I can because it's really broad strokes because it is all condensed into one item, one segment, that being the QQQ, the NASDAQ, and that one segment being distributed amongst a rotation of 8, 9, 10 weighted index names. So today being Monday, July the 8th, tomorrow, there is absolutely nothing on the schedule, nothing at all, except the 6-month and 3-month auctions. That's all that you've got on Monday. On Tuesday, at 10 o'clock in the morning, Jerome Powell will be testifying. That is July the 9th. There are a couple of bond auctions, there are a couple of Fed speakers, but again, there's really nothing out there as far as that goes. He will then go on to the Senate and testify on Wednesday, July the 10th. We get a little bit of data, very little, and then we go into Thursday. Thursday, July the 11th, being CPI. CPI report will be out before the opening bell on Thursday, and CPI days have been whipsaws. They have been reread and rewritten because, quote unquote, Fed fund swap traders are pricing in 5 rate cuts for 2024. 4 rate cuts for 2024. 3, 2, 1, 2. We're back to 2. All because of the jobs report, which I'll get over in a little bit as we get closer to the end, with unemployment having peaked to 4.1%, which we all know the game. All they do is revise the numbers after next month's report to make it be so that BlackRock is able to get what they want, which is what they got there on Friday. So CPI is there on Thursday. You got a couple of Fed speakers as well. And then July the 12th, we begin earnings. We also have PPI coming out in the morning, but we begin earnings. And JP Morgan, as you all very well remember, back in January when they reported, we destroyed the trade on JP Morgan. Now, again, this being earnings season, I do not trade pre-earnings and hold through earnings. I see absolutely no purpose in doing it. The advantage that I have had for the better part of 15 years is trading after the report is already out and deciding whether or not there is a trade to be taken. And we've done pretty damn well doing that. So that's where we're at. Quickly running over where we're going through, and on the SPX, okay, let's just... I'm not even going to use derogatory terms because it's, 4 green days in a row, very short week last week because of 4th of July, boom, and we got a green week. This is now, okay, for those of you that are aggressive, very well calculated odds trading when it comes to doing the spreads, this is 5 green weeks in a row. Now, you have a decision to make on the week ending May 24th, whether that was a red week in and of itself, minus 0.63 on the week. But you now have 5, 6, 7, 8, 9 out of 11 weeks, or 9 out of 10 weeks, with the 1 week being a half week, 10 out of 11 weeks, green since the April lows, when we knew we were going to bounce no matter what. 10 out of the last 11, 9 out of the last 10, however you want to call that week ending May 24. This is fucking euphoria, guys. And yeah, during the month of June, every Friday closed red. Well, we didn't get a red close last week. We had that bump up over there off of the Jobs report, we traded once again under a 40-point range and went up there to a higher high, which I'll get to that in a little bit as well. Over on the spreads, again, with that being the jobs report, on Monday, tomorrow, that will be 45 trading sessions without a minus 1% intraday move. Now, we had that minus 1.3% over there on Friday of last week from the high to the low, but that was not a minus 1% day. During the course of May, into the end of May, the beginning of June, we had very, very close to minus 1% days, but zero actually recorded. So again, this is simply keeping track. We are at 345 sessions on Monday since we have had a minus 2% intraday move. 351 is what we had going into that January of 2018 high before we had that 11.5% decline from January to February 9th. January 26th, February 9th. Course of about 2 weeks, minus 11% move. After all of that had been compressed for the better part of 350 days. So that's where we're at. And I don't see it coming tomorrow. It may come on Tuesday, but all that we're getting here is a dip. That's it. A dip is all that we will be getting. So on to the QQQ. This is 10, confirmed 10 out of the last 11 weeks since that April bottom that have closed green. 11 weeks. We are now closing in on 52 trading sessions on the QQQ since it had a minus 2% day. And it's not that significant of a track as we do with the S&P, because as you see here in March, we had a minus 2% day. Over here in April, we had a minus 2% day. We had one in February. We had one at the end of January. We had one in the very first day of the year. Minus 2% days are not anomalies that, oh my God, look at that. But we went through the entire month of May and the entire month of June without one, which is starting to get a little bit, questionable. Anyway, it's 52 trading sessions without a minus 2% day over there on the QQQ. Up incessantly. 22.26% year to date was at the highs. Absolutely unbelievable. But more importantly, okay, this is up 20.22% off of the April low. That's just... I got nothing for you. IWM, after having had some very, very nice 1, 2, 3, 4, 5 red, 1, 2, 3, 4, 1, 2, 3, 4, 4 red closes in a row, 2 green weeks, got a red week last week, and IWM we'll get to is just doing absolutely nothing. I mean, nothing whatsoever. So, quick move on to the charts. The VIX. Very few people notice this, but after the lows there on Tuesday when we reached 1189, it's been climbing all week. Climbing Wednesday, climbing Thursday, holiday. And then here you are on Friday, climbing back up above 1255. Absolutely insignificant where the VIX is right now. Like I've said and continue to say, until we're up in the 14s, this is still under 100% complete control of BlackRock and those 8 individual names that weigh more than 8 of the best friends that you have that need to go on a diet. On to the SPX, again having charted and looking as if everything looked good, 55.10, 55.23. Last week Friday, got that little pop and then that bigger sell-off right down to that 54.46. Tuesday, okay, I just bring you in. I'm not going to change the screen. On Tuesday morning, we had dropped down to 54.46. We broke below 54.46. And then Tuesday, Jerome Powell came out and said, oh, no, man, everything's really cool. It's copacetic. I went to another Fish show, went to a Grateful Dead show, and yeah, everything's really cool, man. It's just really, really cool. And because of his little pump there on his comments, we went into this completely non-structured move to the upside, which I'll tell you now, SPX, yes, we are due a dip. That dip should not break below the 5500s, and then we should proceed higher into 5581, 5592, and even further above that, which I'll get to in a little bit, because what we're looking at now is around 5625 as we progress into the end of the month. But 5581, 5592, we got another 10, 20 points to the upside, and then we're looking at that 5530, 5525, 5510, 5505 to be very, very clear support. Show you here, coming off of that May low, which, again, we knew that we were oversold and we're going to get a bounce off, but a 7.29% move? Nah. Here's that minus 1.31% move I was talking about from last week Friday. Tuesday morning, again, Tuesday morning came down there. We needed to break out of that zone. We had been trading at 54.86, 54.46 for weeks. Here we are. There we went. There you go. Onto the QQQ and looking at the structure of this just insanity move. 20% move coming off of the April lows. 1, 2, 3, 4. Looking here at a very clean 1, 2, 3 with a shallow 4. And we are looking to produce the wave 5 top on the QQQ, which, again, we are not there. We're not even close to it yet. We reached up here to 498. Didn't expect to get to 498 at any point in time. We're here. 500 is obviously on the cards. We're looking at a dip, and after that dip, no lower than 485, we should then proceed to get the major tech earnings reporting at the end of the month, rebound up here into 503, 504, 506 on the QQQ. So end of July, we should be into this plus 500 range. 503, 506 area as we go into the end of the month. Into this week, very, very likely, very plausible, very possible, we get a break below that 490 into the mid 480 area, and then we make our move up into the 500s into the end of the month, which you get the FOMC meeting at the end of the month as well. So again, that's where we're sitting here with the VIX. Bring it on over into the other views. The Dow Jones, the DIA. Nothing. Literally nothing. This thing's just been floating sideways for the better part of a month and a half now. Nothing. And continuing to monitor it, continuing to obviously keep track of it, because you have big real names that you can go out there and touch and feel that are significantly declined from their all-time highs. And then you have the banks that are going to be reporting this week. JP Morgan, number 1, Citigroup, number 2, Goldman Sachs next week. We're sitting here trolling, and there is absolutely nothing bullish. There is absolutely nothing bearish about the Dow Jones right now. IWM, same story. I'm looking at a 90-day 4-hour. I'll go out to 180-day. Having come up here at the end of last year, we have nothing but sideways trolled this 207, 202, 195 for 6 months. Nothing going on with IWM whatsoever. So I bring you over here to the SPX, looking back at last year. Last year, when the last time we had a minus 2% day on the SPX, as we went into that March bottom, March 2023, the bounce off of the March bottom into when Right here in May, when NVIDIA created AI, they invented AI and invented, this round-tripping scheme with BlackRock. We had a 20.96% move off of that March low into the end of July 27th, before we went on a 3-month decline down into the October 27th lows, almost minus 11% on the SPX, right up into that. We're in the exact same boat right now. Major tech earnings aren't going to be reporting until the end of July, so what we're looking here is very similar to here at the end of June into the beginning of July last year. Right there, you had a very nice little dip, bang, and then the bounce going into earnings. We're in the same boat where we are right now. Exactly the same boat, the same ocean, the same water, same temperature, same fish. We should get a dip, and from that dip into next week being OPEX, which there is nobody big reporting next week, into the week after that, the week after July 19th, which will be a minimal reporting week. And then you go into the final week of the month, into August, July, which ends on August 2nd. And that being the week when you are going to get all of your major tech reports. And you're also going to have your FOMC meeting. So that's the week. The week of July 29, 30, 31, August 1 and 2. That should be when those levels we were talking about over there on SPX QQQ, that's when we should be reaching up here into this 56.25 over onto the QQQ. We should be reaching up into that 505, 506 area, the final week of July. So what we're due for now is possibly a couple of points, maybe 1 point, 2 points on QQQ, maybe 20 points over on the SPX, and then a dip which does not break down below 5,500, and from that, proceed to the upside. On to the last moment I was going to show. Yeah, the NASDAQ. I mean, here, we're looking just at a 2-week period here. Here's your June 24. Your move here into the end of the month, June 28th. That nice decline that we got going into this week, Monday. And there is zero structure. No structure whatsoever to this move to the upside on the NASDAQ. Same thing with the QQQ. Zero structure whatsoever. Just bang, bang, down nearly to that 475 area. Jerome Powell comes out saying everything is fucking cool, man. I mean, it's cool. And off to the no structure, straight on up, out of nowhere. Call it because of your tech names. And I will go ahead and leave you here with these because I went over these a little bit over my own weekend. Google, all-time highs there on Friday. Zoom out significantly on Google. And here's your earnings spike over here in April. Never filled the earnings gap and just been on a steady upward trend since that. Again, with Google, you can't. You got earnings coming out, or not earnings, but you got an election year this year. Google and Meta, that's where every single bit of revenue for election advertising will be going to the two of them because they own every company out there. Bigger, broader, wider view, 191 really does look very clean and very significant. That we should be in a topping zone, but there's nothing whatsoever to go out there and do with Google. Come on to Apple. Again, dude, let's just get out here and be clear about this. Right here, which a lot of you guys are making sure you can stick the thumbtack right in my forehead because I got into that Apple July 19th 185 puts trade. Right on here into this move here on that Tuesday morning. Apple had once again gone red for the year, down below the 2023 close. And it was clean, excessively clean. And then they come out with the news about AI, how they are developing the newer version of AI, which is called AE. You pronounce the I like if you were in Spanish country. And here we are off to the races. So again, same thing, bigger, broader, wider view over here. 226, very clean. You should still be able to get up to 230. So again, just the structure coming off of that low, which took out the October lows of last year, down here onto a 4, and here we are in a 1, 2, 3, 4. We're placing a 5 for the big 5 for the bigger 5 of the bigger 5. So 230 had been a target for a very long time. Well, looks like we might actually get it in the course of the next month. Go on to Meta, and Meta, there's nothing but very significant look on Meta. Here's your all-time highs going into September of 2021. You're big. We're coming out with our blurry vision goggles, whatever the fuck they called that thing, gap down, back there in 2022. And your move off of that since the bottom on October of 2022 just blow you out of the fucking water move off of 88. 88.09 filling that gap perfectly as we went into July of last year. Then your little decline, ABC, coming off of that October low, and whammo. I mean, just whammo. Wider view, bring it on out. Again, 525 appeared, should be pretty significant, but very odd structure that you have over here on Meta with the move up here in September of 2021, and then the breakdown after that failed blurry vision into the lows of 2022, having taken out those lows from back there in 2019. Very, very odd scenario with Meta. But again, they own everything and everybody loves Facebook, so Facebook can go fuck itself. Microsoft, very similar scenario. Looking back here on a 30-day, coming back here onto the May 31 lows, just uproar, nothing but uproar. Better than 15% move off of this. Bigger, broader, wider view over here on Microsoft, and again, don't have anything drawn out there on the clean, but come back onto Microsoft, and yeah, this 458, 459 area should, but nothing to show out there. Nothing whatsoever to go out here with Microsoft and say, okay, guys, you did what you did. It's enough. AVGO, going to start tracking it only because of the weight. Tesla, excellent move here on Tesla. Tesla down here onto that 138, as you guys remember me talking about getting long onto Tesla because of the earnings. Bang, move right back up to that 193.81. That was an excellent move. It was an excellent expectation, and it was all because of the charts. Had nothing to do except because of the charts. Now, last week, as we came to this trend line, we resisted it quite well. Very well. Come back here. Right on here, coming into last week, Friday. Here's June 28th. Came up to that trend line, resisted it very clean. Came in here very early in the morning, right at the opening bell here on July 1, and started right above it on July 1. And since then have been above it and pushing here onto 242, and you've got 258, 259 right above that. So I bring you out to a bigger, broader, wider view so you see where you are, and here's your trend line. And that trend line, it had been broken a couple of times, back in July, back in September, back in October 2023, and every one of them declined for lower lows. Here we are with a significantly lower low, nearly taking out the 2023 lows. and right back up. 242, 240, 259. That should, for every bit, be the top. You got earnings coming out in 2 more weeks. You sit back and wait for earnings, or you sit back and you play it ahead of that, because 259, 242, absolutely, yes, should be your toppity top resistance area, and nothing going down below 207. Anything below 207 should be something to be worried about. So here on Amazon, very clean, very, very clean, coming off of the revisit to the COVID lows. Okay, let me just repeat that. The revisit to the COVID lows, where we bottomed at the very beginning of 2023. Boom, boom, boom. This should be a wave 3, which is due to be topping out 205, 207, should. And then the wave 4 decline, as long as it does not start breaking down below this 165, 150 area. Believe it or not, actually, yeah, Amazon has the ability to go make a stretch up into the upper 200, lower 300 area. That's what the charts have. That's all I'll say. NVIDIA has left the building. There is no more NVIDIA. NVIDIA's gone. NVIDIA has now been removed. NVIDIA is no longer everybody's best friend. NVIDIA went to sleep. As it should. And here we are holding above that 114, 112 area still. The Fibonacci's all moved up to 108, but the reality is down here in this 90 area. 98, 95 very much should be where, when it's time, gets a move. AMD. Wow, AMD. Look at this move on AMD. Yeah, well, how about this here? Look at this move on AMD. You had everybody running, going absolutely fucking nuts because of NVIDIA. And here's AMD since the March highs. Where are we? We're minus 35%? Minus 35% back red on the year, down here on the lows over here in April, beginning of May. And here we are just trolling in that 174, 165 area, or 155, 20-point range, having never made it back up here since we got over here in May. So, again, with AMD, I don't see anything to go jump for joy and start talking about, 200s, 220s. I just don't. But there again, I'm not really that good at what I do. I've only been living free, financially free, out of the system for the better part of 20 years. Half of my adult life, I have been out of that bullshit world. And whether you like it or not, it's going to get really, really fucking bad. Whether it's in a month, whether it's in a year, I still see that you get a Donald Trump rally after he wins. It ain't good, people. So whether you want to take my offer or you don't, you're going to look back one day and say you wish you did. Enjoy yourselves.
The researchers state that BlackRock, State Street, and Vanguard are the largest shareholders with 88% of the S&P firms. And morons and fucking imbeciles call this an equity market, a stock market. America, oh, the land of opportunity. Who the fuck are you kidding? 3 companies, and as he said, Kennedy, it's really one big company, own 88%. The crime syndicates running America. And as them buying up houses, Redfin said in 2023 that investors bought up 26% of affordable homes. That began, by the way, back in the panic of '08, when there was the subprime mortgage crisis. The bankster bandits, who got $29 trillion bailout, according to Bard College, Levy Institute of Bard College. Hey, you don't have a job? You're deep in debt. Don't worry about it. Sign over here. You got a subprime mortgage. So all these foreclosures that happened, the banksters, Blackstone, one after another started buying them up. And that's what the country's become.